Hello everyone. Good day to you wherever you're watching. My name is Oluwaseun Fadare. So as we're rounding up as part of our 2023 year review, so I'm trying to do one of our analysis based on our data that we've been able to prepare on our template. So let me share my screen with you to do a review of our trend marker monitor. So the trend marker monitor helps to identify the movement of the market and helps to be able to look at the market from the long-term perspective. This has been developed using different formulas on an Excel template. So this Excel template will be able to provide uh, prices from which we can be able to use to measure and monitor the direction of the market. So let me share my screen with you with the template. We have the data for the year 2023. So we'll be doing some samples and I'll be explaining to you what the implication of the template means. So as you can see here, so let me take off the chart first, and then I'll be able to go through it. Okay, so you can see here, this is a test, going to do a test of the information. So for example, we are testing USD CHF. So we're testing USD CHF. So what I do is I have these data. Let me show you the origin of the data. So I have these datas all through the year 2023. You can see it starts from month one, month two. You can see month one, month two, month three, month four, month five. So it can be anyhow, it can be any time, depending on the time frame, whatever period, you know. So that is where so this is for the whole year, up till December. You can see up till month 12. Okay. So and here we have the week, this is the weekly report from my data. So we have the daily data, weekly data. So weekly high and low prices and the trend of the market based on a theory that I've developed. So every day, every week, every figure should have a color. So it's either it's colored in red or it's colored in green. So the red means the market is going upwards and the green means the market is coming downwards. So that's will be more reviewed later, through personal training and discussions, but that is what I just wanted to know here. So each coloring, each movement, each trend shows either a red or a green. So a red means the market goes up, the green means the market came down. So you can see for each of the products, for example, AUD JPY is these three prices, high, low, and the yellow line is more like the average of them. Okay, so that's what it means. So this is the higher price, this is the low price, and this is the average price we will be in between. For the AUD USD, for example, you can see it's here, these three form positions. Okay, so this is where I get my data. Okay, so now, for example, now, as you said, um, this is USD CHF. So let's come down to USD CHF. So here you can see USD CHF is here. So I'm going to copy the high and low of USD CHF, okay, all throughout the period. So I've copied it based on the data. So that's why data is very, very important. And I'm going to paste it here, okay. So that's it. I pasted it, the high and low here. So after pasting it, then what next do I need to do? Okay. So after pasting it, the next thing I need to do is that I need to now come to the move. So this is what I call the move. So how do I get these moves? So these moves comprises of all the colored prices on these high and low positions. So you have all these, all the only the colored positions here. So you can see here is the green, here is the red, here is the 2 green, here is the 4, is the 5, 6 red. As you can see here, the green, the red, the greens, like that till the end of the period. Okay, so this is what I call the moves. So based on my own tabulation, this is what I call the moves. So what I do then is I'm going to copy these moves as they are here, as you can see. So I'm going to copy them and I'm going to paste them here on this. So I'm going to paste it here in figures. Okay, so automatically pasting it here calculates the other values that you have. So the day extension is the reverse of the moves. Okay, so as you can see, this is 0.931, which is the white price, the price in the white position. The next one also is the price in the white position. So this line will reflect on the white prices. So both moves and the day external EXT is the high and the low prices, as you can see here. So these two prices are the same thing as these two prices as well. It's just that they've been reformatted for on a different position. So after then, we have all these variables, the I. So this cumulative I shows the highest trend from the start to the end. This shows the lowest trend. Cumulative low shows the lowest trend from the beginning to the end. Okay, so that is what. So anytime we have a new low peak or whatever, the price changes indirectly. Okay, so that's how we are able to get all these. So all these prices are automatically computed at the end of the day. Okay, now, so after the computation, what I now did, as you can see here, it's to get the graph with a special positioning to be able to identify the trend, the one extension of this here. So, and like I told you, so this is different computations logic of the position. So here, you can see is on the moves, but it's also call it specially a trend. Let me see how to compute it specially again so that we're able to. So let me try a new one. Okay. So I go to insert. Okay. So then I come here, the up down, yeah. So it's the up down trend bars. So yeah. So Okay, so it's because the background, so we have the black and the white. So the black means the market is going up, and the down means the market is coming down. Okay, so that's the same thing that we have. This background is okay, maybe for that, for example. Yeah. Okay, so you can see it's a bit clearer now. So you see the white means the market is on the downtrend, and the black means the market is on the uptrend. Okay, so that's how to get that. So let me go with what I've done before. Okay, so that's the picture. So even with this information, you'll be able to know the trend of the market and also be able to identify the peak prices of the market. So you can see that the market has been changing from this position downwards until it got to the lowest point at this point, and then went back up before coming down. So this shows the move of the market. Okay. Also, based on this information, that this draft that I've been able to compute here using my formulas, you can see that it easily shows us. So you can see that it easily shows the movement of the market, although with different formulas. So what it does indirectly is like pushing this information also in this trend, but in a different format. So let me explain each variable to you. So this is the cumulative I. So that's the highest from inception until the end of the period. This is the cumulative low. So you see that this seems to be the most extreme point out of the two. Okay, so this is the cumulative high and cumulative low. So at the end of the day, the market must surely have these two positions at the end of the period. Then we have the DH, the one I, D1 high, and D1 low. So what this does is that this measures a risk factor. Okay, so the risk factor is then used to monitor the trend of the market. So it helps to monitor the trend of the market. So like I told you earlier, that we have the start high and the start low. Okay, so this is our daily high and our daily low data. So this shows how the market is moving using our daily or weekly, in this case, our weekly positions. Okay, so that's the D1 high and the D1 low. Then the CHCP is like a control point. The CHCP and the CLCP are the control point. So the CHCP is the current high control point, and the CLCP is the current low control point. So what does this mean? What this means is that it helps to identify the range for buying and the range for selling. So the CHCP, which is the current high control point, measures a distance from the cumulative high control point, measures a price range from the cumulative high to the end of the control point, as you can see here. So it's the gap, the distance between this point and this point. Okay, while the The CLCP is the control, cumulative low control point. It measures a risk between the lowest point and that position. Okay. So what this means indirectly, depending on our control gap, which is what we put here. So that helps us to give an idea that, look, if we have any sell between this range and this position, it's a good market. And if we have a buy between this range, it's a good positioning. Okay. So it gives us the position where we should have our buys and where we should have our sells. So, and if you look at it from this position, you see that at this point, like here, we have a good buy from this point down to this line as it's going. So for example, if I change, just as you are watching it, let's assume that I change it to point, I have 0.04 here. So let's assume I change it to 0.02, for example, okay? Let's look at the picture. We see that it moves. So you see that it has moved higher. Can you see? So there is a bit of distance between the blue and between the cumulative high control point, which is this, and the cumulative low control point, which is this. So what this means, like I told you earlier, is at the beginning, we don't know where to have a buy or to sell. But this point shows the good point that we can have our sales in between this point, even though we can still have our sales downwards. And this point shows where we should have our buy, even though the market is coming downwards. So as the market is moving down, our control point also moves down, and then we can be able to have sales at the top of it. And same thing, we can be able to have a buy at the top of it. But just looking at this picture, you will see that it's looking at the picture alone gives us an idea of how the market is moving and the trend, and what will also be able to tell us what action to take. So for this, as you can see, the market is coming downwards. So this is a better market for a sell position. Okay. So, and as you can see as well, that the market is, even though the internal other moves, the moves of the market, the daily is showing the trend moving up and down, but it gives us a good opportunity of what action to take, whether to buy or to sell based on the move of the market. So these are part of the things that we're going to make use of in the new year 2024 to help us to take positive and accurate information as much as possible. Okay. So that's how we've been able to, so let me change this based on, let me revert back to my old prices of 0.04. So it doesn't matter of 0.404. It doesn't matter, like I said, it depends on what we've been able, I think I can, USDCHF can also, so it depends on whatever we agree on. So you can see this is the position it was before. And then after the changing, you can see that the two lines got improved. Okay. So that's it. So so as you can see, that's the same way all others have been computed. Okay, so looking at this picture, you can see this is Euro USD. See, the market has been an uptrend, and then later the market came down again low. Can you see? So, and like I said, this is a position for a sell as much as the market is going up. And then when the market came down here, these are good positions for a buy. So we can do multiple sells at the top here, and also within this range, multiple buys as much as possible. Okay, so same thing with Euro JPY. Sorry, this is GBP, not EUR. Okay, oh, sorry. I think I wanted to change that because I want to. Okay, so let me turn it, let me make it EUR. Okay, so I'm going to get the data for EUR based on this information, and then we'll able to go through it together. Okay, so let's go together. So here we have EUR. So I'm going to copy the data of EUR for the whole of the year. Okay, so here I have it here. So I'm going to fill in. So you see, that's the move positions. So I colored all the reds, I copied all the reds, and then I copy all the greens as well to fill in the white positions. So I copy them to fill in the white positions, and we follow the trend to the end. So all the white positions will be. So all the white positions will be covered. Yeah, so you got the information. So next, what do? We copy all these moves. We copy them to the moves. Yeah. So as you copied all the moves, you can see that all the day external EXT changes itself to the opposite prices. So based on this, so we have two formats of this as well. So let me paste them there so that I'll be able to see the picture. So sorry, it's because I have not changed. So I'm going to change. You see how this is going to change now once I put in the right information. Can you see that? So it's all black mostly. So it means the market was on a uptrend using these positions. But the competition is in two parts. So this is the second part of the competition, the second picture. Okay. Now, just like I explained earlier, this also another graph using the body of our computations. So that shows the cumulative high, the one I explained earlier. So you can see easily how it shows the move of the market and measuring the risk positions. You see, so the market had been on a buy side right from this point. So at this point, our ability to be able to identify the risk positions and take the bull by the horn and follow the trend upwards continually will help to be able to maximize. So as much as we have a sell at the top, we can always have a buy at the bottom in this range, okay, to ensure that we have a buy at the bottom of the sell just in case the market wants to revert back, and also to be able to recover back our initial sales that are at the bottom. So we want to have as much buys as possible here to cover up for any of the sales at the top, so that as it's pushing the market up, any sell at the bottom should have more buys at the top to recover the profit. And same thing, if the market is coming down, any buys at the top should have more sells at the bottom to recover for it. Okay, so that's the idea. So you can see that from this pictorial view, we can easily be able to monitor and see how the market is moving in the course of the period, and then also help us to take correct actions as much as possible. And this also shows a black trend line, which means the market is more on the upwards than on the downwards. So the white shows the downwards and the black shows the upward trend. Can you see that? So the black shows the upward trend, the white shows the downward trend. So, and you can see the market is rotating in between each of them. So when it finishes the white, the downtrend, it moves on, though even though this is a downtrend, but you can see that it has got to the limit of the downtrend here. Okay, so from this point on, it begins to go up, even though it's still a downtrend positioning, but it's telling us that, look, it has reached the maximum peak of the downtrend, and then the market is reverting back. Same thing as the uptrend. It shows that the market is going up. It has reached the limit of the uptrend, and then the market is coming downwards. It has reached the peak of the downtrend, then the market is going up. It has reached the peak of the high trend, market is coming down. It has reached the peak of the downtrend, the market is going up. So over time, with this information, we are able to know and follow our actions accurately and precisely and correctly. Okay, so let's do like 3 more examples so that you'll be able to see how the strategy works. Okay, so um here I'm going to pick the formula has already been computed, so all I just need to do is just to put in the data and it compute itself, you know, and then we'll be able to measure to see the results. Okay, so let's look at our data and identify. The only thing is we need to get the computation of the values because some of them are not correct. Okay, we are using an old report, so let's try USD card. So let's copy USD card. Okay, okay. So for USD card, you can see, let's still use our gap of 0.04. So you can see that the market has changed itself. So it's because you know, like I said, we are using an old formula. So we need to follow the rules, okay? So we fill in all the white spaces. Fill in all the white spaces with the red. So all the remaining spaces are for the reds, okay? Yeah, so finally, so like I said, let's see the products we chose. I think that's USD card. So we replace our title with USD card, okay? So as I told you, computed for both the short and the long-term trend, different logic. So we are going to post, yeah. So we've been able to identify the trend now and the moves, okay? So we copy all this, we copy them to the moves, and you see our chart changing. Can you see? So let's go down below as well. And then we copy our start handle as well because it's different from what is there before. And you see our chart also changing. So here now we have USD card. Okay. Okay. So just like I explained, oh, okay. So let's change these 2 points. Yeah. So you can see. So depending on whatever figure, whatever risk we want to take, So this is more like a risk. Let's put 0.02. So the purpose of this is to give us an idea of the risk so that we'll be able to measure and know the position that the current price is. Can you see that it has also changed as well? So what it means with this information is that this is just the market moving itself, right? So, but this risk helps us to identify one, the trend of the market, whether it's coming up or going down, and also the range that the market is. So as you can see from this point, this is a buy position, these are buy positions, these are buy positions, and also these are sell position. But that does not mean that a buy position may not change to sell position in the future. It depends, okay? So, but it helps us to identify, if you compare this with this as well, you can see when the market is coming downwards, that's when it's in white, when it's going up in black, when it's coming down, and then it gets to the peak of the white of the downtrend, and then moves back up again. Can you see? Gets to the peak of the uptrend and moves downwards again to the peak of the downtrend. So these moves up and down will be able to help us to identify the action to take as buy or sell. So that's what it's been able to give us. So this graph, these positions has helped us to identify how the market is moving, and so to help us to know whether to buy or to sell. Okay. So yeah, so that's, you can say, the trend. Yep. So sorry. Yeah. Okay. So USD card. So just like I said, you can see the movement of the market up and down. Okay. That's at the top side. And unlike the bottom, like I told you, has a lower gap. So you can see here as well too, this range shows the risk. So this range is more of the sell position, and this range is more of the buy position. So you can see, and like I explained earlier, if you want to reduce the gap, also it automatically affects it. But this, as you can see, the market was initially coming down, then it went up to this point. Then from this point, the upside was static. Then the market changed trend downwards. From this line, you can see change downwards to this point. After hitting this new low again, the market moved back upwards to a new high at this point. And then at this point again, the market is coming down to a new low. So now the market is in a buy range, as you can see from the formula and from the information I spoke about. So this position is a buy. As much as the market buys at this point, the market is safe. Okay. Then from this point on, again, the market goes upwards to the high side, and from the high side, it comes down again. So anytime the market is at the top side, then it becomes a sell range from the top at this point. Okay. So with this, it's able to identify, we're able to monitor the movement of the market in and out of the trend line. Okay. So that's it. So let's do one more example so that we'll be able to see how it works again. Okay. So for this, like what I'm going to do now, let me delete the data so that you'll be able to see the graph as well at the beginning, how it looks like. So you can see. So these are the two graphs that we need. So they don't have any information for now. Okay, so it doesn't make sense. It doesn't make a meaning, but by the time we finish our computation, it will surely make a meaning. Okay. So let's look at GBP AUD. So GBP AUD. So the risk as well to, let's move it to 0.03. So let's copy. Let's get the trend as well for the market. Okay. So like I said, we fill all the white gaps. Fill all the white gaps to get the moves. So that's it. We have all the moves perfectly. So next thing we are going to do is we are going to copy the moves and move it upwards so that you can calculate the day EXT price and the mid. So can you see here? So I'm going to paste it there. So let's move up as well. So here again, we copy the moves and then we copy the moves. So as you can see, the market reached the lowest point at this point, and then it moved up. And so, like I said earlier, this range is a buy range. It's good for buying, and this is good for selling. Okay, so meanwhile, if you look at the sell prices range, it was moving upwards. So as the sell price is moving upwards, then we start buying upwards as well, more beyond or above the buy limits, the buy range. Okay, so this is just initially to help us to identify the risk of the market at the beginning, and then to identify the trend of the market and take actions as accurate as possible. So that is the purpose of this, okay? So this information will help us to identify how the market moves, and then we'll be able to take the correct action and know whether to buy or to sell. And so at the bottom as well, you can see here as well the second part of it. You see, because it has a low range, but also, like I showed earlier, is able to identify our range for buy and our range for sell. And also, we are able to know the first peak of the market, which is the first extreme of the market. And this takes us all the way as a buy for the rest of the year. So ability to identify the first position will help us to take correct and accurate decisions till the end of the year, or till the extreme. It gets to the extreme. And then after getting to the extreme, we can be able to relax and then look out for a new entry point inwards as a buy or as a sell. But from our analysis of this theory, it helps us to be able to take actions as quickly as possible at the beginning of the year, so that once it gets to the first extreme, then we'll be able to monitor the market till it gets to the final extreme, okay? So finally, for this strategy, let's review the CHF JPY. The CHF JPY. Yeah, so the CHF JPY, we've copied that in. Yeah, so again, like normal routine, copy all the moves. Let's get all the moves positions. Yeah, so we've gotten all the moves. So let's copy the moves to the right place. Can you see that it's getting more interesting? So we copy to the moves per position. Yeah, so we've copied that in. So let's see how the graph looks. So, so you can be able to. So it's been able to show the trend as well. So 4 is our gap, and I think at the bottom we have 1.5 as well. Fine. So look at the picture. Sorry for that background voice. So as I was explaining earlier, so now this has shown the moves direction. So you can see the trend going upwards, as you can see here. And then also for the other one, you see that the risk, so if we, the more we increase the risk, so for example, it's because of the gap of the market. So let's assume that this here, the risk, let's assume the risk is 3, for example, be able to, so you can see we had a little gap in between them. So, and if you look at the top as well, just like the sample I was saying earlier, so let's assume we had 7, for example, here. Um, so so you can see that the distance has increased a bit. So these positions, you can see that. So this helps us to be able to identify the first static point, and then from there we are able to take actions as quickly as possible for the rest of the month. So this is the purpose of this. So this helps us to identify the long-term trend of the market or the trend of the market as quickly as possible, and uses those information and those updates to take correct action over time, so that we're able to know when the market is buying or when the market is selling. Okay, so that helps us, that keeps us informed about the direction of the market, and also able to help us to take correct actions as much as possible. Okay, so that is it on um so that is it on our trend marker monitor template. So the trend marker monitor template will be able to use it effectively in 2024 to be able to see how it has helped us to be able to predict the markets effectively and accurately. And then we'll be able to use that to be able to know whether the market is in a buy trend or the market is in a sell trend. Thank you very much for your time with me tonight today. and as we've been able to review the 2023 market performance. So hopefully by God's grace, we'll be able to make use of this very well in 2024 to be able to get the best results that we desire in the market. Thank you very much. I remain yours and only Oluwase Fadare. You can reach me on fadinvest@yahoo.ie. You can send me an email on fadinvest@yahoo.ie or send a message or through the comment section if you have any question. I really appreciate your time going through this with me, and hopefully we'll be able to have more better opportunities in the year 2024. Thank you very much, and have a great year ahead. Cheers. Bye.